Well, it's Valentine's Day today, and lots of love going out to everyone out there. Charlie, did you get up this morning and give your love a little Valentine's love?
Yeah,
oh,
I surely did.
Good. Well,
unfortunately, my wife wasn't around, so I mean,
all right.
I have to give it to her too.
She's getting the Valentine's from somebody else, or what's going on here?
Oh yeah.
Okay. Well, in this lovely land of crypto here, it looked like a beautiful day to wake up to. I saw lots of green happening on my end. Put in an order last night that was fulfilled. The cupids of Bitcoin blessed me with a little more Bitcoin, so I'm pretty happy. Charlie, you told me about a wonderful guy named Andy Hoffman. We somehow managed to get blessed twice by the Cupid of crypto today, and we do have the wonderful Andy Hoffman on the phone with us. Andy, how you doing?
Doing great. You picked the right day for it.
It is, huh? Yeah. You feeling good today? You feeling the love from the crypto Cupid?
Yes, I think that in my view, this correction is over. We've had a correction every January. I think it's been for the last 5 years. And this one was a little more exaggerated because the move going into it was so large. We had a 4 or 5x move in Bitcoin, and even more for the altcoins. So we had to have a correction, and I think we're through it. So it's time to move on to the excitement of moving into a world of SegWit-enabled Bitcoin at a time when the global monetary system is having all kinds of problems that are only going to get worse.
Yes, yeah, and we have these newbies in here that you're kind of like myself, who I haven't experienced the ups and downs in January, and everyone that I turned on to Bitcoin when I heard about it in November, and started buying back then, and they're like, "Oh, it's a bubble," and they all started laughing at me. And I was like, no. I mean, from what I heard, this happens every year, but not to this extreme. Is that correct?
Well, just first off, you're having me on as a guest. It's kind of nice to introduce the guest to the people so they know who they're speaking to, because I don't do this for charity. I do it because it's a business I run, and so the people talking about me have no idea who I am.
Oh, sorry, Andy. Well,
yeah.
Let's do that then, Charlie.
Yes.
We have Andy Hoffman. Here's worked for 16 years on Wall Street as a trader and sell-side analyst, covering the oilfield service sector. His focus is his attention on precious metals, and has written exclusively on the subject of gold and silver. He became intrigued by the emerging field of cryptocurrencies, and his site CryptoGoldCentral.com is a subscription service which deals with the subject of cryptos. He is also a frequent guest of YouTube channel X22 Report, and we encourage our listeners to view his interviews. Andy, thank you for being with us.
No problem. And I'm also one of the on-air personalities on the World Crypto Network, which is the largest crypto media channel in the world, and so I do a show every week there. I'll be doing another one tomorrow, and again, of course, at CryptoGoldCentral.com, that's my website where I write every day tirelessly, and I do consultations about cryptocurrency and precious metals. Thank you.
Wonderful. Charlie, you're a little bit smarter than I am when it comes to the financial world, and I'm going to let you go ahead and start this off with a few financial.
Yeah, thanks for being with us, Andy. One of the things we try and figure out here is to have a more full understanding of what currencies are. I mean, we have two words here, crypto and currency, and I'm not sure if people quite understand what the function of a currency is, or what the hallmarks of a well-established, well-run currency. Can you speak more to that subject?
Right. And again, I had a long Wall Street career, and at the end of it, which was 15 years ago, I started to get into precious metals because from an investment standpoint, I started to get focused on the issues with the dollar and fiat currency in general. And at the time, the only real alternative that I saw was precious metals. Precious metals have far more of the function. Look, yes, a dollar is universally recognized, although it's probably a lot less used than people think. You can't just go into every country and use dollars. You do have to translate them into other things. But yes, it's more recognized and used than most other fiat currencies. It has to be a unit of account where they're all reliably the same amount. Like a dollar is a dollar; it's fungible. But the biggest problem with fiat currency is that it doesn't store value. It's the worst store of value that's ever been known, and there have been hundreds of fiat currency regimes, and they've all failed due to hyperinflation. Really the only way to escape hyperinflation is to get acquired by another nation that has fiat currency and then deal with their hyperinflation, because it's a Ponzi scheme which requires more and more money to be printed. That's exactly what's going on in this country. As the debt keeps going up, the inflation keeps going up. And so what does the central bank do? It votes, the government votes itself the right to print more money. That's the only way to keep the game going. Then eventually it implodes. And that's why Bitcoin was born. I mean, that's why precious metals have thrived for so many centuries, because it was a hedge. But now that they have figured out ways to manipulate paper markets, precious metals wasn't working the way it used to be. I mean, they monetize stocks and bonds, and of course they suppress precious metals with all kinds of derivatives. The problem is that now that this technology called Bitcoin came along, which possesses all of the things that you say that a currency needs to be, it's fungible, it's portable, it's in this case it's unconfiscatable and uncensorable, it's divisible, and it stores value because it's written in the code that you can't print more money. Even gold is not limited. I mean, there's no cap on how much gold there is. It's harder to get out of the ground. But the point is that Bitcoin has all these properties, and it's hard to, if not impossible, to manipulate. In fact, it is impossible to manipulate. So the point is, Bitcoin came along at a time when the fiat currency system is in so much trouble, and it possesses things that even gold couldn't dream of having.
We did a show about a week and a half ago, and we were talking about the 1980s. When the Reagan administration came in and started changing the tax code, doing some deregulation, and what we noticed with the dollar was how remarkably unstable it became during that period of time. It just exploded, and then as quickly as it went up, it came straight down. One of the things I guess we kind of try and talk about is fiscal and monetary policies. Are current fiscal and monetary policies destroying the dollar, destroying the currencies around the world? And is the cryptocurrency capable of withstanding the kind of machinations, let's say, that the Securities and Exchange Commission may want to do?
Right. Well, look, you go back to the 80s, the whole issue was we were on a gold standard, even though that itself had been kind of abused until 1971. So when we finally fully got rid of it, when Nixon took us off the gold standard and pretty much said, enabled the Federal Reserve to print as much money as it wanted, that's when the whole game started, this whole global regime where there's not a single nation in the world that has a currency backed by anything. When Reagan got into office, it had just started, so there was no debt. I mean, that's the whole point. You can't print money and create all this debt out of thin air with the gold standard. So he came in at the perfect time because he was able to spend as much as he wanted because it was like having a credit card with nothing on it. And that's when the game started, but of course it gets progressively worse because, as I said, it's a Ponzi scheme that must grow larger, and so the debt just grows and grows and grows, and then it starts to grow parabolically, and then it grows hyperbolically, and we're right at that precipice right now. If it weren't for all the rigged markets, trying to mask as bad as things are, it would be much worse. But I mean, you see what's going on. You see that the national debt went up $200 billion. I think it was yesterday alone. So we're in a situation where the system is near its end, and you say, well, okay, and it's not a coincidence that Bitcoin was literally invented in October of 2008 during the financial crisis, and we're at the point right now where it's starting to get some serious adoption. It's now that it's got SegWit, it's going to get much faster and stronger and secure, and people are starting to buy it, and institutions are getting in, and yes, the regulators around the world are all looking at it, as are governments. The problem is, as I said, there's nothing they could do to stop it. Yes, right now there's less on-ramps So you do have to, in many cases, not all cases, I mean, there's things like localbitcoins.com, but in many cases you have to go through the system to send cash to exchanges. And so, yes, regulators, they can make it difficult, but for the most part, most nations have embraced it. Japan loves it. Japan is probably buying hand over fist. Korea loves it. China has fought it, but it's been to no avail. And as you said, the U.S. just had a Senate Banking Committee hearing last week. They had the head of the CFTC, that's Commodity Futures Trading Commission, the head of the SEC, Securities Exchange Commission, and they actually said nothing but positive things. And there's nothing they can do because you can't stop Bitcoin. You'll be lucky if you can even track who's using it, and pretty soon Bitcoin will be completely anonymous, and that's part of the whole SegWit thing. Now that that's enabled, not only will we have scaling, but we're going to eventually have full anonymity, and right now it's pretty anonymous as it is. So the regulators have to just think. I mean, governments are going to be made or broken by their decisions, whether they're going to embrace or fight crypto, but particularly Bitcoin, because Bitcoin will win. It's the most perfect financial technology ever created, and it's just getting started.
Ladies and gentlemen, we're talking with Andy Hoffman. He's the principal at CryptoGoldCentral.com. We suggest anybody to go to his website if you want more quality information that he provides constantly. He has been a long-time analyst of both the precious metals and financials markets. Andy, the one thing that we've noticed when we were doing our show, what we came across was that there's kind of this dissonance. We keep hearing people disparaging cryptos, but at the same time, we notice that, for instance, Starbucks has decided to use cryptos except for Bitcoin. Venezuela has said, we're going to go ahead and start at least looking into the possibility, or in fact has said we're going to use cryptocurrencies as a way of being able to facilitate trade. So there's this dissonance between what has been, in many cases, the mainstream media's approach to the cryptocurrencies, and yet, for instance, UPS has also said they've been doing some research and development into a crypto-backed locker, using cryptocurrencies for their lockers and for some of their equipment. So I guess this is a threat, obviously, to some people, and it seems as if there's this complete dissonance or disconnect between what the mainstream media is saying and what the real world was saying.
Well, the mainstream media is clueless about everything. I mean, fake news is a real term because, for the most part, they find their own agenda. They actually, most of the mainstream media companies are owned by the big corporations that are in bed with the government, and yes, Bitcoin is a threat to the status quo. So I haven't read anything from the mainstream media in years, and that goes all the way back to stopping reading the Wall Street Journal probably 15 years ago, because you don't get real information. You have to find the people in the alternative media who are telling truth, who have knowledge of these things. And then, of course, there's so much of the status quo that feels threatened by it, some of it unjustifiably, like, Starbucks. I mean, if this Howard Schultz really thinks that he's hurting Bitcoin and helping Starbucks by saying, I want to accept crypto but not Bitcoin, why would you want to accept any other crypto but Bitcoin? But they're not going to. They're just talking. They're posturing because he wants to get the stock up. I said, mentioning blockchain and cryptocurrency. But they just, they're just status quo guys. They have no interest in change. The change will be forced on them when there's such widespread adoption that it becomes necessary. And then when they do, they'll realize, wow, this is much better for business. Why was I fighting it all along? Mostly because they just had no idea about it. They were told it's bad by people who are threatened by it. And the funny thing is, very few people are actually threatened by it. This is a fantastic thing. I mean, if you're a central bank, yeah, you're threatened by it. You can't print money and hand it out to all your friends and do insider trading with it. But everyone else in the world, it's great for. And eventually, everyone will realize that it's great for the world. And if you were smart enough to invest in it, while everyone was still fighting it and putting out propaganda, well, then you're going to be very wealthy. But if not, then you'll have to join the party late.
So the value. So yeah. Now, correct me if I'm wrong, but it seems as if the value of cryptocurrency comes in the fact that it is limited. It cannot be printed indefinitely, unlike currencies, unlike the policies that we're coming to now. Because I've had people ask me, well, where is the value? What does the value of the cryptocurrency lie? And I said, in my opinion, it was because of the fact that you can't print it up. You just can't create it. There's been
no, but that's the case with Bitcoin. But I mean, the rest of the cryptocurrencies. I mean, literally, pretty much every single one of the 5,000 now. Pretty much every one of them, with very few exceptions. I don't know. maybe Litecoin and a couple others, are centralized. It's like one guy owns the whole thing and prints as many as they want. And yes, some of them have caps that are theoretical. But of course, when one or a handful of people are in charge, they can change those caps. And a lot of those caps are monstrous. I mean, yes, Ripple has a cap of 99 billion ripples. I mean, so yes, it's capped. But no, I mean, I don't even like the term cryptocurrency. Bitcoin's a cryptocurrency because it has that property of scarcity. But the rest of them, Ethereum is no scarcity. Ethereum, you can make unlimited. Pretty much all of them. The only ones that you theoretically can't are these forks of Bitcoin because they are Bitcoin. The problem is that when Roger Ver runs Bcash, and the other day, about a month ago, he said, yes, we're hard forking. Remember what it took to get a hard fork in Bitcoin? In Bcash, he could just say, I'm doing it tomorrow. Everyone just done. Well, what if he says tomorrow, I want there to be twice as many Bcash? It'll get done. So that's not really a cap. Bitcoin is a cap that's enforced by the consensus of the entire world. It will never be increased. There may be a couple others out there. I'm guessing Litecoin has that same thing. I mean, there's a lot less developers, but enough nodes out there that Litecoin probably has that same inability to change. But 95+% of cryptos, which I call crypto assets, not cryptocurrencies, have unlimited supply. So they are not currencies; they are assets. I mean, they some of them will serve useful purposes that are not money, just useful purposes. But most of them won't. Most of them will be subsumed or competed away by Bitcoin. And there will be a few, though, that can do things that Bitcoin wouldn't want to do. And those, it's kind of like the dot-coms. You had really a handful of companies were the big winners over time, and the vast majority were gone. And some were acquired by the big winners, and, that's what we're going to have here. But, yeah, there will be big winners, but there's only going to be one: money, the Internet of money, which is what Andreas Antonopoulos would call it. Antonopoulos is Bitcoin.
Now, let me ask you, you were talking about consensus, and that Bitcoin has basically come to these decisions based on a consensus. Who makes up, can you please speak to that mechanism? Is it a worldwide decision that's made? How do we come to the decision of how the policies of Bitcoin are created?
Right. Again, let's say you wanted to make a change. And again, I'm not a developer, I'm not exactly how they do, but there's ways of submitting a request. I think they call it a pull request. I'm not even sure how it works, but if you wanted, like when we had SegWit, I mean, one of the developers said, I have this idea of something we can do with a soft fork, but we need consensus, and he put it out there in the public forums, and it got to the point where it was like, okay, it's going to get done if like 90% of the people vote for it by supporting the software. That's how consensus works. And that's what happened. People supported. It took a lot of political fighting because while they were trying to do it, for instance, you had like the Roger Vers of the world trying to say, no, we want to do it a different way. And then you have the miners who are like trying to stall it because they had something called ASIC boost, which enabled them to have an unfair advantage in mining under the prior regime. So it was all kind of political battles. But in the end, you had 90% of the nodes voting to make the change. And unless you get 90% of people or whatever they choose to be the number, which is pretty much, if you choose a lower number, it's not going to work. It's got to be something where almost everyone agrees. And in Bitcoin, which now has thousands of nodes, and now you have giant players coming in, it will be impossible to get anything done unless there's 100% consensus.
Now, we've been hearing, or we've been reading about commodity-based cryptocurrencies or crypto assets, specifically gold-backed cryptocurrencies. My question is, how does that work? Is it the asset backed by the actual development of the gold? One of the companies that we talked to is backed by a mining company, or a mine actually in Colorado. So if that's the case, why doesn't somebody just say, well, why do I need to buy the cryptocurrency, the token? Why don't I just go buy the material itself, the gold? How does that mechanism work? Or do you feel that that's going to be a future development that we should keep an eye on?
No, it's just a marketing gimmick. It's comical. I mean, why? Like you said, it would be like saying Bitcoin backed gold. Why do you need to back gold with anything? Just like, why do you need to back Bitcoin with anything? And how would you do it? I mean, that's the whole point. The whole point of Bitcoin is it's decentralized. No one runs it. So let's say you were going to say we're going to back Bitcoin with gold, okay? Well, who's going to buy the gold? And who's going to store the gold? And who's going to account for the gold? No one. There is no Bitcoin Inc. So you couldn't do it even if you wanted to. It doesn't even make practical sense. But more importantly, why would you need to back? Look, Bitcoin is trading for $9,000 right now. It's not backed by anything. What does it need to be backed by? It's the whole thing. But more what you really get, because obviously there's no Bitcoin marketers to talk about this. It's the gold people. Gold people, you know, I was a gold person for 15 years. I was one of the most prominent gold commentators on the planet. I worked for the bullion industry for 6 years until I left last year. I worked in the mining industry before that. Everyone knows me in the gold world. And, you know, these people, they're jealous. They don't want to see the reality that the world is changing. But they do want to capitalize because it's been such a terrible underperformer. So they say, yeah, we're going to create gold-backed cryptos. And people who just have no clue, they just listen. Oh, that sounds good because Bitcoin is up. But there's no such thing as a gold-backed crypto. It doesn't even make sense. It's just a marketing term to try to get someone to give you money because they don't know what they're talking about. There's no such thing as a gold-backed crypto.
Well, the problem that I have with it to begin with is that, for instance, there's not even the stability with the precious metals that you would, you know, consider necessary to back anything. For instance, in 2011, gold hit about approximately $1,900 an ounce, a little bit more. It's bouncing around now at $1,350. So it lost roughly 30% of its value. It would seem to me that it doesn't make any sense to back anything, whether it's crypto or whatever it may be, with something that can be so manipulated or so volatile. So,
well, you could believe. I mean, it's your choice if you want to believe. If you want to own something backed by gold, but again, that's a speculation. It's not that gold is too volatile. It's just a matter of you as the buyer have to decide. Do I think it's going up? I mean, this is theoretical. Of course, there's no such thing as a gold-backed crypto. It doesn't make sense. But if there were, I mean, like you said, why not just buy gold if you think it's so strong and you buy Bitcoin? I mean, or whatever. They're two different things. It's not like one's going to get stronger, but more importantly, who's going to manage all this, and how do you even value it? It makes no sense. Again, it's just a marketing term, just like all these companies, like Starbucks talking about, oh, we're going to do stuff with crypto. What crypto? What crypto are you going to use? They just want people to go, oh, they're a modern company, they're hip, so let's buy their stock. I mean, that's all that Starbucks is doing. Starbucks is quite happy with the system as it is. They have no interest in changing.
Well, is that something that? Sorry, Charlie. When you said that, I'm reading something here that says J.P. Morgan proclaims Bitcoin ETFs are the holy grail.
Really? Didn't Jamie Dimon just 5 months ago in September say that he would fire any person in his firm caught being stupid enough to trade Bitcoin, and that it's a fraud worse than tulips, and it's going to end badly? Didn't he say that 5 or 6 months ago?
Yeah,
and then
he
went back on it.
Yeah.
Now I saw it the other day. It said they put out J.P. Morgan puts out the Bitcoin Bible. Well, maybe their clients should have listened to me when I was talking about it 2 years ago. But the Bitcoin Bible probably just find ways to get people to give them J.P. Morgan money for products instead of just go buy Bitcoin. That's what you should be doing.
Ladies and gentlemen, we're speaking with Andy Hoffman. Andy Hoffman is the principal of CryptoGoldCentral.com. He has been a long-time analyst of both precious metals, financial markets, and now cryptocurrencies. We suggest that you go to his website, get any information you need. It's a subscription service, but as we said,
I have a free 7-day trial. You can check it out. Yeah.
Well, then check it out. But he has been a long-time person, and we have been, at least I have been listening to him speak for quite a while. I'm very happy we've been able to bring him on for our listeners. Excuse me, Andy. It would seem right now that the cryptos are at an inflection point. We've had some pretty big, wild moves right now. Where is it going to go forward? And let me back up a little bit. What's going to be the catalyst, do you think, that's going to push this thing to the point, to Bitcoin specifically, to the point that it's going to be something that people will realize this is legitimate? Forget anything that I've been told. What do you feel is going to be that one event, if there is such a thing, that's going to catalyze this?
Well, it's a good question, but of course, no one knows if there's one event or multiple events. We've had so many events just in the past 2 years alone. I mean, the reason it went from $400 2 years ago to $20,000 2 months ago is because we've had so much increase, so much good things have happened, the adoption, the understanding that it's a secure network. I mean, last year, if you say what were the biggest events, and obviously the big price rises started in the fall after these big events. One was we got SegWit activated. It was what they called the scaling debate, because people were not sure how we were going to get Bitcoin, if it's going to be a big-time global network, to go fast, like, let's say, as fast as Visa. Not that, I mean, look, the primary use case right now is that it's digital gold, but, to be a big-time global network, it's got to be faster. And some people were trying to say we're going to do it with big blocks, just raise the block size, and then the Bitcoin community said, no, that's dangerous and it's not going to help, so we want SegWit. So it was a big fight all year long. And through the fight, the system maintained stability. And finally, when the fight was won, as it should, because the consensus of the world voted with their nodes that they wanted the soft fork and not the big blocks, the price exploded. And then 2 weeks later, those, as we call it, big blockers, who in my view had an agenda completely different than scaling. I think they were in it for very selfish reasons. They thought that they could profit from their shenanigans, and it's failed on them. But we saw it in spades, because 2 weeks after SegWit was locked in mid-July, this Bitcoin Cash, or Bcash, forked itself off because they thought they can compete with Bitcoin with big blocks and split the network up. And what happened was they did it, and nothing happened. Bitcoin just went up more because they realized, wow, you really can't split the network up. And those two events, the fact that we knew that the Bitcoin chain is now immutable, meaning it cannot be broken by bad actors who have an agenda, and that we have SegWit, which means we can now layer on all of these technologies that can make it much faster and cheaper and more secure, which we're seeing right now. The Lightning Network, Schnorr signatures, decentralized exchanges are coming on, rootstock, all these things. Those are the two events of last year that really propelled it. And then, of course, when the price went over $6,000 in somewhere around September, October, that made it a $100 billion market cap, which means it's basically investable by every major institution in the world. I mean, you're talking about central banks and major hedge funds and institutions and family offices. They need that kind of money. And once it got up there, bam, it took off. And then we had the CME futures legitimized it. Soon we'll have ETF. That was last year. This year, I mean, there's all kinds of things that can happen that we were waiting to see what happened. But to me, the big event, the big thing that's going to happen this year is, I think by the end of this year, that scaling is going to be so much more advanced than people thought. So that, when we talked about even a month or two ago, well, it's going to take a while to scale and it's going to be inefficient. I think we're going to see a sleek, very fast, very cheap network by the end of this year that's going to blow people away and have them saying to themselves, wow, this thing really can scale to Visa type or faster levels. And I think when people realize that, that's going to be a monster catalyst for Bitcoin adoption. That's how I see it.
When we started this channel, we began talking about fear and public's fear. When one of our very first broadcasts, we talked about California, Illinois. The public pension plans were going to be altered. For years, you couldn't touch them. The state Supreme Courts kept coming along and saying, look, they're written in stone. But recently, it seems to be cracks in that situation, and people are afraid. We've been seeing, higher and higher levels of poverty, higher levels of insecurity, financial and economic insecurity. And so, in a way, we have an obligation, or at least Dean and I feel we have an obligation of basically being as straightforward as we can, because we understand people are moving into certain areas because they're looking for a safe net. They're looking for a safe yield. Can people be assured, or at least feel safer with Bitcoin than they could, let's say, for instance, other, so-called legitimate or traditional types of investments?
Well, again, we talked about the currency aspects. Look, fiat currencies are all being destroyed at an exponential rate, and they will continue to be. The purchasing power of dollars, euros, yen, all of them will get worse and worse and worse. Except now now you have Bitcoin. The gold market has been held down for so long with paper investments that have made it not scarce. So it's really been very difficult to escape that system. But now you have Bitcoin. So the fiat currency, you're going to see a lot of fiat currency leaving that system and coming into Bitcoin. And some of it is going to filter into the rest of the cryptos because people don't quite understand yet that the others are not Bitcoin. Some of them, like I said, will be big winners. Most of them are just kind of money grabs. But then you talk about, mainstream asset classes. Then there's, there's stocks and there's bonds and real estate and fine art and all kinds of stuff. And the whole point is, I think that the anachronism is not just fiat currency. I think legacy financial markets, which total $300 trillion are, because when it comes to stocks and bonds, for instance, one, they've been monetized by central banks so much that they're trading at record high valuations. Unless they're going to keep printing money and creating more inflation to buy them, they're not really good long-term holds. I mean, look at interest rates. They're surging. Bonds are plunging now because all that inflation is finally seeping into the system. So bonds, which are in a 35-year bull market, taking, yields to like lowest level in centuries or millennia, are going to be a terrible investment. And then you have stocks, which are only really high because of low interest rates and monetizing by central banks. So, the outlook for real gains, I'm talking about inflation-adjusted gains in stocks, is horrible. And in bonds, the outlook for any gains is horrible. And so when you look at Bitcoin, everyone gets all excited. Well, it's so high, it's $10,000. Yeah, but it's $10,000, but there's only, 16 million of them out there, and there's only going to be a couple million more. And actually a whole bunch of them, probably a quarter of the float, has been lost in time. There's barely, it's only a market cap of about 150 billion now. That's pennies in a $300 trillion asset market. So I think Bitcoin and probably other cryptos, by proxy, are going to suck trillions out of the legacy markets, which are as overvalued as they've ever been before, at a time where debt and inflation are as bad and getting worse as they've ever been. So I don't own stocks and bonds and never will. I even sold the rest of I sold my silver last year, and I sold the rest of my gold recently, because even if gold goes up, it's going to be dwarfed by what's happening in this new asset class, which is the digital age leader, Bitcoin.
You just mentioned something. I was stunned at the size of the forex market compared to the cryptocurrencies. If people want, just take a look at both of those and see what Andy's talking about specifically in terms of scale or in terms of scope. And you can see that right now, it is a very tiny portion of it, but it can grow, obviously, because it's got a lot of room to grow. So one last question, Andy, before we have to let you go. So what do you see as the long-term future? Well, in the long-term future, what do you see is going to happen between now and the end of the year? Are there going to be any more or any specific types of instances that we can say, we should be looking for this right now? Is there anything that you can tell our audience that this is something that you should keep an eye on?
Well, yes, the end of the year is long-term. I mean, the end of the month is long-term. Crypto moves at what I call a double dog year's pace, because things change so fast. I mean, to think that last year in June we were at the height of the block size debate, the scaling debate, and we're like, we'll never get SegWit, and then a few weeks later we got it. And, then we're like, the Lightning Network, we're going to start working on it. It'll take some time, and bam, it's all over. Everyone's using it now. So the thing is, by the end of the year, I think the crypto world itself will be vastly different than it is even today. And if you ask me what I think that Bitcoin will be a much, much bigger global phenomenon by year end than it was even at the height of the speculative mania at the end of last year. But this time around, it'll be more of adoption and institutional knowledge of what's going on and the scaling that's going on. And on top of that, there's some serious stuff going on in the financial markets right now, between rising interest rates and a plunging dollar and central banks out of control with printing money. So there's a lot of stuff that could happen this year. But if you ask me, when we get to the end of this year, people it'll pale in comparison the popularity that Bitcoin had last year compared to where I expect us to be in December of this year.
Ladies and gentlemen, we have been talking to Andy Hoffman. He is the principal at CryptoGoldCentral.com. He has been a long-time analyst. He's been on Wall Street for over 15 years. He's studied the markets, both precious metals, financials, and now cryptocurrency. Go there, to his website. He has a 7-day free trial. It is a subscription service, but he does give you a 7-day free trial. Check it out. He has remarkable amounts of depth of knowledge, a remarkable depth of knowledge about a number of different things, as you can tell by our interview. Andy, thank you so much for being our guest.
It was my pleasure. Look forward to doing it again.
All right, thanks, Andy.
Take
Appreciate
care.
it, Ryan.
Awesome.
Well, there you have it.
All right. Well, that was
Fascinating.
that was a great talk.
Good.
Finally, have somebody on this show that can shed some light on the other people that just kind of come on and stammer and like myself that doesn't. I don't know a whole lot about this stuff, and I'm enjoying learning more and being able to share this with our audience too. You know.
Good. It was good questions, and just let me know when there's a link available that I can distribute.
Absolutely.
Absolutely.
Good.
All right. Thanks, Andy.
Okay, well,
I'll talk to you. I gotta go have my Valentine's lunch right now.
Oh, right on.
All right.
Thank you.
Thanks, Andy.
Bye.
That was one of the very best interviews we've seen or had. So I really thank everybody for listening to it. I appreciate you having me on too.
Yeah, I'm bummed. It went so fast. I can't believe that was 45 minutes. We were only granted 30, and we got 45 out of him, which was awesome. But I had a bunch more questions that I was kind of hoping to ask. Last month we had a break-in in one of the securities or one of the trading markets. Let me pull it back up here. I just had it up and went and lost the damn thing. Here we go. Hackers hacked into CoinCheck in Tokyo. They got away with $500 million worth of digital tokens. How does that when you hear that somebody can just sneak into a digital bank, snatch your money out without a gun or a mask or a getaway car? How they do that, and how does that affect the price of it? Does that put a little dip in the curve of cryptos?
I would think it should. These are questions that, it is a new technology. It is a new, it isn't a new technology in the sense that it's been around for at least 10 years that I know of. But you have to, I guess you have to be able to understand that currencies or that this technology can be hacked. There are going to be those interests outside of cryptocurrencies that are not going to be that anxious to see it, obviously, succeed. And like Andy was pointing out, and we pointed out as well, there's a huge market outside of cryptocurrencies. And if you take it into context, for instance, like the foreign exchange market is overwhelmingly bigger than cryptocurrencies. It's even bigger than the bond market, which is much larger than the stock market. So when you start to see, when you talk about the trillions, hundreds of trillions of dollars in assets that somebody has a stake in, it's going to be a battle. No matter what we have to say, there's going to be a war going on, a financial war. And we said before that zero interest rate policies were kind of a war against savers. There's going to be a war against any number of different types of investments. And I think we just have to come to terms with it. We're just going to have to understand that those are going to be that's been the reality of the financial markets for quite a while. And,
I guess that every generation has its own. I mean, back in the stagecoach days, we had the cowboys and Indians and people jumping stagecoaches and taking the gold, and we had pirates taking gold, and we had bank robbers. So and then we got the credit cards and people stealing credit card numbers, and I guess there's no really way to really secure your money. They break into your house and break steal your.
But it is more than that, just a personal safety measure. There's a reason why the Securities and Exchange Commission was established. There's a reason why there's a control of the currency. There's a reason why banks are overseen and and have some sort of oversight. There's a reason why public auditors like me were established to go in there and take a look at the efficacy of the financial statements. The markets themselves are very, very unstable, and they're prone to this kind of manipulation. They're capable of being manipulated. I'm not saying that the cryptocurrencies or crypto assets, as Andy put it, are the same thing, or necessarily going to be that way. But understanding the overarching aspect is, markets are unstable. Markets have capacity because we don't have perfect knowledge. We're not capable of understanding everything that goes on. And cryptocurrencies, as you said, is a technology that people are just now beginning to try to understand, or attempting to understand. And it is arcane, and it is hard to figure out for a layman.
Yeah, but, I think that's probably going to keep a lot of even older people. I mean, it's so funny to say older people because we're getting older, but somebody like that would be like my dad's age in his 70s. I mean, he's not going to jump online and learn how to buy a Bitcoin the way I did. I mean, it took me a couple of days to figure everything out, and even my first Bitcoin purchase, I didn't even put it in the right wallet, and I was freaking out because I thought that I'd got scammed. I'm like, oh my god, this is it. So, I knew I shouldn't buy this crap, and the guy had to walk me through it, which they didn't have to do, but the guy walked me through it, and it wasn't a whole lot of money. And
but you have to understand, even your father, people like your father's age and our age, we're coming close to the point that pensions are going to be the main, either Social Security or a pension.
Oh, what Social Security? There's not going to be any Social Security. This is going to be the new way for people to retire. I mean, a year ago, I didn't know anything. I mean, I obviously heard about Bitcoin a couple of years ago when it came out, but I, like an idiot, I turned my nose up at it, and I'm like, oh, that's nothing there. And now, I mean, I could have just with $100, I could have been set for life right now. But
but the point is, that it's fear that drives a lot of these markets. I mean, we talked about that, not in terms of why the Dow goes down 1,200 points in a moment because fear overcame the traders. That's nonsense. I mean, those are computer-driven markets, so that's not it. But what I'm saying is the fear that people are finding that their 401ks are going to dust. Their pensions. I mean, to me, this is a monumental thing. This is a monumental occurrence.
It is. It's great for everyone. It really does level the playing field for anyone to get into this to maybe secure something for their future.
Yeah, but that's my point. I mean, it's something as solid or as inviolable as public pensions, because for years you could not alter a public pension. Once it was established, that was it. State Supreme Courts kept coming down and saying time and again, look, you can't fool with these things. And then California Governor Jerry Brown recently said, no, we have to revisit this. And places like Illinois has pretty much stated we are going to change our pension plans. And you take a look at cities like Los Angeles or San Diego, which I don't even know how they're not bankrupt, because from time to time they announce that they have public pension shortfalls of something between $30 and $60 billion. It seems like nobody really wants to do an analysis or do a real audit to find out just exactly how much is there, because I don't think they want people to be terrified of what's going on. But when you take a look at something as massive as those kinds of conglomerations of money, which are pensions, and that they are going to dust, this is going to be something, and something like your father or you or me would take a look at Bitcoin, and you see that it would go from $400 to literally $20,000 within a matter of a few years. That's what's driving these things. That's what's probably, in my opinion, driving more of an interest into these than anything else. And that's not a good thing. I guess I come back to that. It's not a good thing that fear should be the thing that drives any, I don't care what it is, any investment. It shouldn't be that. It should be knowledge and awareness. And that's what we're trying to do here. I'm glad we're getting people like Andy. I'm glad we're going to be able to get other people from other various places, other various cryptocurrencies to come and talk to this. Because this is, I think, the one thing that we have to do is to try and, draw the curtain back and say, this is the real mechanism. This is how it works.
Yeah. And, the more people that we get on here, the more our audience needs to get involved with this. And since we're one of the only shows that does this live, we do these shows live, and I don't think a lot of people know that. We're doing this live. We're not editing this. What gets said, that's what gets put up online. And we'd like to have people come in and talk with us and say, hey, what the heck's going on? So,
yeah. Well, anyway, I must leave you. I have to bid farewell because I've got things to do. Unfortunately, I got a mortgage to pay. But anyway, thanks for having me on. Let's do this again sometime soon.
Yeah. You guys have any questions? Leave it in the below. Andy had a couple of sites on here. We also left his Twitter information. You guys want to get a hold of him on Twitter? It's at Andy_Hoffman_CG, or just search Andy Hoffman. You go to his website, CryptoGoldCentral.com. You'll find his Twitter handle on there. Charlie, as always, it's a pleasure to hang out with you and have my mornings with you and talk and pick your brain, because I don't have the mental capacity that you do to understand this world of finance. And if I did, I sure wouldn't need to start buying Bitcoin right now when I could have bought it years ago. But hey, it's always great having you. And once again, thanks to our beautiful sponsor, Heine Winery, made in beautiful downtown Yermo, California. You only go around once in this life. Grab all the Heine you can get. Charlie, for everyone out there.
Take care of yourself.
You too. Everyone out from here at the wonderful Crypto the Wonder Dog Show, have a wonderful day and better tomorrow.